The big tax question, 1099 or W-2 for maximum savings. Welcome back to the channel. Today, we're diving into a topic that can save you a lot of money, 1099 versus W-2. Which one saves you more in taxes? It's not just about filling out a different form. It's about fundamentally different ways your income is treated, how your taxes are paid, and most importantly, the strategies you can use to legally reduce what you owe Uncle Sam. The choice, or sometimes the classification given to you by a company, can mean thousands of dollars difference in your pocket at the end of the year. We're talking about significant amounts here. So, whether you're a freelancer trying to figure out your tax obligations, an employee wondering if there's a greener pasture, or even someone hiring help and unsure how to classify them, this video is for you. We're going to break down exactly what each of these classifications means, the specific tax implications, and then compare them side by side. So grab a coffee, maybe a notepad, because we're about to get into it. Cracking the code. What exactly is a 1099? Alright, so let's kick things off with the 1099. When you hear 1099, you should immediately think independent contractor or freelancer. This is the form you'll receive if you're working for yourself, providing services to clients or businesses on a contract basis, rather than as a traditional employee. Think about graphic designers, freelance writers, consultants, Uber drivers, DoorDash delivery folks, or even many real estate agents. These individuals are essentially running their own small business, even if it's just a business of one. The key distinction here is autonomy and control over your work. The most significant immediate difference for a 1099 contractor is how your pay is handled. Unlike a W-2 employee, when you get paid as a 1099 contractor, there are generally no taxes withheld from your paycheck. That means the gross amount you bill is the amount you receive, at least initially. This can feel great at first bigger paychecks. But, and this is a huge but, you are then solely responsible for calculating and paying all your own income taxes, as well as self-employment taxes, to the IRS and potentially your state. This lack of withholding is a double-edged sword. On one hand, you have more cash flow up front. You're not having a chunk taken out before you even see it. On the other hand, it requires discipline. You need to be setting aside a portion of every single payment you receive to cover those future tax bills. If you don't, you could find yourself in a very nasty situation come tax time, owing a huge lump sum plus potential penalties and interest. It's a common pitfall for new freelancers who aren't prepared for this. The specific form you'll most commonly encounter is the 1099 NEC, which stands for non-employee compensation. If a business pays you $600 or more in a year for your services, they are generally required to send you and the IRS a Form 1099 NEC by January 31st of the following year. This form reports the total amount they paid you. The W-2 world understanding employee status. Now let's switch gears and talk about the W-2. This is likely the situation most people are familiar with, as it represents traditional employment. If you're a W-2 employee, it means you work for an employer, you're on their payroll, and they have a significant degree of control over your work. What you do, how you do it, and when you do it. Think of your typical office job, retail position, or factory worker. You receive a Form W-2 from your employer each year, usually by January 31st. The defining characteristic of being a W-2 employee, especially when it comes to taxes, is withholding. Your employer is responsible for calculating and withholding federal income tax, state income tax, if applicable, and your share of Social Security and Medicare taxes directly from your paycheck. This means the amount you see on your bank statement, your net pay or take-home pay, has already had these taxes taken out. This makes tax time generally simpler for W-2 employees. Beyond just withholding your share, your employer also pays their own portion of payroll taxes. For Social Security and Medicare, often called FICA taxes, you pay 7.65% of your gross income, and your employer matches that with another 7.65%. So a total of 15.3% is going towards these programs. But as a W-2 employee, you only see your half deducted from your pay. The employer covers the other half. This is a critical difference compared to 1099 contractors who have to pay both halves. The Form W-2 itself summarizes your total earnings for the year, your gross wages, tips, and other compensation, and the amounts withheld for various taxes. Box 1 shows your federal taxable wages. Box 2 shows federal income tax withheld. Box 3 shows Social Security wages. Box 4 Social Security tax withheld, and so on. This form is what you'll use to file your annual tax return. Chapter 3. The 1099 Tax Game Deductions versus Self-Employment Tax. Let's dive into the tax implications for 1099 contractors. The big headline is the ability to deduct business expenses. As an independent contractor, you can subtract the ordinary and necessary costs of running your business from your gross income. This lowers your taxable income and your tax bill. Expenses can include a home office, supplies, travel, marketing, and professional development. The key is that the expense must be directly related to your business and well documented. However, with great deduction power comes the self-employment tax. As a 1099 contractor, you pay both the employee and employer portions of Social Security and Medicare, 15.3%. This is in addition to your regular federal and state income taxes. So set aside enough for both income tax and the self-employment tax. Chapter 4. The W-2 Tax Path, Simplicity and Withholding Benefits. Now let's look at the tax implications for W-2 employees. As we've touched on, the experience is generally much simpler and more hands-off compared to being a 1099 contractor. The primary reason for this simplicity is the withholding system. Your employer acts as the tax collector, taking out federal income tax, state income tax, and your share of Social Security and Medicare taxes before you even see your paycheck. This means a big chunk of your tax obligation is handled automatically. This automatic withholding significantly reduces the risk of a surprise tax bill at the end of the year, assuming your W-4 form is filled out correctly. For many people, this provides a sense of security and predictability. You know that your taxes are being paid throughout the year, and often W-2 employees even end up getting a refund if they've over-withheld, which, while not financially optimal, it's like an interest-free loan to the government, many people enjoy receiving. A major financial benefit for W-2 employees is that your employer pays half of your Social Security and Medicare taxes. You pay 7.65%, and they pay a matching 7.65%. This employer portion is a significant cost that you, as the employee, don't directly bear from your gross pay. If you were a 1099 contractor earning the same gross amount, you'd be responsible for that additional 7.65% yourself in the form of self-employment tax. This is a crucial point when comparing job offers with different classifications. When it comes to deductions, W-2 employees generally have fewer options than 1099 contractors. Chapter 5. The Showdown, 1099 versus W-2 for tax savings. Who wins? Which one actually saves you more in taxes? The answer is, it depends. It's highly dependent on your individual circumstances. Let's recap the core trade-offs. As a 1099 contractor, you can save through business deductions, but you pay the full self-employment tax and need to track everything. It requires diligence and financial organization. As a W-2 employee, your employer pays half your Social Security and Medicare taxes, but your ability to deduct work-related expenses is limited. You rely on the standard deduction and pre-tax contributions. So, when might a 1099 be better? If you have substantial, legitimate business expenses. Conversely, when might a W-2 be better? If you have very few business expenses. The benefit of your employer covering half your payroll taxes might be more valuable. Wrapping up your tax path, your choice. So, there you have it, a deep dive into the world of 1099 versus W-2 employment and how each impacts your taxes. As we've seen, there's no one-size-fits-all answer to which one saves you more. 1099 contractors have the power of deductions but carry the full weight of self-employment tax and administrative duties. W-2 employees benefit from employer-paid payroll taxes and simplicity, but have fewer avenues for work-related write-offs. It's all about weighing those pros and cons against your personal financial picture and work style. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and hit the notification bell for more financial tips and insights. See you in the next video.